you, Paulie?
Hey, how you doing?
Good, buddy. Maybe we'll get some resolution to this ranging action in the dollar on the NFP tomorrow. Maybe we get some resolution.
Very, very good point. Didn't think about that too.
So
maybe right here on that.
So I've been watching you. Nice. You get some great areas to pay attention to when you're here for Paulie's session. You know, and you know, you don't totally rely on anybody, but you use your own work, and then when you see one of its pivots or scenarios unfolding, should give you more confidence to click your mouse. So
there you go.
There you go, buddy. So we'll see you tomorrow, Paulie. Let me just take a look at a few things here. Can you guys see my screen? Hi, Dennis. How are you? Okay. So yesterday took the short in Euro Pound right here and covered it on the spike, and then I tried it again last night and I'm out. It's just too neutral. You know, my philosophy, people have been following me for a long time, that if you want to position yourself in front of red events, why not go to a casino and play roulette, or you know, punch the mindless slot machines, because you know, I really don't think it's trading. I think it's predicting. I try and teach people to react to the reaction, so you're flat going into it, and if you get a move that sets up a sale or a buy for you, you're ready to react to it, rather than betting red or black on the outcome of a big number.
Hey Dale, good morning, and great job to Paulie. Somebody threw me the screen, so I was going to give you the screen. Yeah, here let me.
I could grab it. Maybe I gave it to you.
Maybe you did. Yeah, I got it. I'm like, I don't want it.
Not yet.
Anyway. I'll take it in a few minutes.
All right, here we go.
I'll let you talk. All right.
All right, buddy. So Euro Pound flat. You know, basically these two candles here are going to determine the next direction. Are we going to get one more push to the upside above 91? Long term, I've been talking about new highs for a third up here for a long time, but we could still pull back one more time. One of the reasons I'm saying that is I still think, despite what gold's doing, what a great call by Steve. He's been accumulating it. I missed it, that perhaps what we're going to have in the dollar is, and even Paulie had a very nice area that maybe we could go to 96.5 or something like that. So, you know, here we are. I still think that we could have another one of these, that this is maybe an A wave or the first part of it. And maybe I'd be more inclined to buy dollar weakness tomorrow up around this level, being wrong over the 1730 level, looking for something like this from there, maybe some type of fib extension. They'll be interesting to see how gold behaves, but you know, what a market tell with silver collapsing to new lows over the weekend. I said, when silver goes to 1410, just blindly buy gold, and I couldn't do it blindly. I was looking for some lower numbers in there. Let's see here. Yeah, it looks pretty good. It would have to get back under 1200 to look negative. So what a great trade by Steve Volge. And, you know, he's not normally just an outright, you know, always looking to buy gold or any of the metals. He's not a perma bull, perma bear in any of the PMs. A lot of us kind of have that issue, but definitely not Steve. And I think another big resolution is going to happen in stock indexes. Paulie started mentioning that it's starting to look tired. And earlier in the week, we were here, okay? And this is a wedge line right up here. So we had a throw over on it, and we're now living back inside of the wedge. So unless the S&Ps can start closing back over 2,900, there is a chance for a break. And this low yesterday was pretty significant at 76. It's the old high from February right here. So far we're holding 76.80 was a high last February, and so far we're holding it. And it's a pretty good pivot. So back underneath it, I think there could be some problems. The shift that took place yesterday, I think, was pretty good market tell how NASDAQ was down over 1% with the other indexes, not being down as sharply. And to me, I was talking about this could be a magnet right here. The triangle that it broke out of hasn't quite gotten down to it, be about 470, 450. But back underneath this 450, NASDAQ's going to have some trouble too. I would take a shot and sell a, rally back to 76 with stops over the highs. See if we're going to have some type of problem September. There are going to be some more sanctions on China early next week. Just a geopolitical backdrop. I know the market's been immune to it, but even Amazon gave something back. There aren't many FANG stocks left with good solid uptrends besides Amazon. So we'll see what happens there in those markets. And yesterday I talked about a 3-driver in Aussie. It's still developing. Here was 1, 2, 3. We're talking about it here. So this candle was your signal, was the first good candle. It's no trip to Hollywood, but you're up about 38 pips. So I kind of talked about if gold is good, I don't think you're going to see a collapsing Aussie at the same time. So if gold's breaking out, we should get at least some type of recovery in the Aussie, and maybe we even get something like this. So that's the way the Aussie looks. I wouldn't be shorting it down here. I think you have to wait for at least a good rally back to 260, 280 on the Aussie. And really, I'm interested in what my partners have to say with what's going on. I really don't like to do a lot, try and take care of business before 8:30 a.m. Eastern time on an NFP day. So I'm pretty flat right now, except for some long-term bearish positions and ETFs. But I'm going to let the markets play their games with the algos, let them go stop hunting and look to react to it. But my bias is if the number doesn't come in as good, and I'm sure we haven't had any NFPs where people have been looking for a weak number. But if we get, a neutral number and they try to sell the dollar off, I would look at shorts in the euro up around today's highs, see what happens there. So with that being said, we have a Canadian guest with us today, Greg Schnell. He is a certified market technician, lives in Canada. His focus going into this week is the natural gas market. A lot of Canadians are very natural resource based. So I'm going to also ask Greg about how his countrymen are feeling about what's happening between our two countries. If the gold is good, the miners really are still scraping the bottom. So even though gold has had a nice rally, all right, and this could be the second rally off the first low, we had a rally, then a pullback. But you look at some of the miners and some of the ETFs, and they're sitting right here at the lows. Here's Nugget, right, making new lows, diverging. Maybe this is 1, 2, and a 3. Same thing even with the blue chips, like the GDX. Let me show you that. So GDX are not the juniors, they're the big ones, kind of the blue chip golds. And, we have this bounce in gold and then a higher low. And in the shares, we had a bounce and lower lows. So it's the opposite of what a bullish setup would be. You want to see gold making new lows with miners making higher lows. So I thought I'd just put it out to you. But I wouldn't short it here either. You have some nice divergence on some of these gold shares. And let's just take a quick look at Microsoft got hammered, diverged up here. So, this is part of the NASDAQ story. And really one of the last one standing is Amazon, and they finally took $40 out of it. I mean, the RSI is way up here, but, why can't you have 10, 15% in Amazon in the next few days? We all know that the other ones are under pressure. And then one of the other stronger groups has been the semiconductors, and we haven't made a new high in the semis since here, so you have to go back to March. So that could be rolling over. Be careful in equities now in this time period. Everyone thinks there's going to be an event in October, and the market doesn't want to accommodate what everyone's thinking. We've talked about that. Maybe the event is September or November. So, when everyone's looking for, October is going to be the bad month, and everyone's going to wait to get short at the beginning of October, maybe the break happens in September or November, because there is a old Wall Street adage that Thanksgiving is for the bears and Christmas is for the bulls. So with that being said, can I draw a trend line on the Aussie right from 2000? How to trade on support? Okay. Yeah. If you can't hear the audio, ink it, log out, log back in.
Well, how's he going to hear what you just said? I mean,
that's a good point.
When people say I can't hear, I have no audio, I have to type a little note,
okay.
Say, turn up your volume or log out, log back in. Yeah.
Good point, buddy.
Anyway, hey,
audio.
We have 4 minutes until ADP non-farm private sector jobs coming out. So I thought I'd just take it over really quick. And it's investing.com day, right?
Yeah, that's right.
Yeah,
so we have the viewers from there.
Right? Yeah, welcome for those of you from investing.com, and for those of you that are not catching Paul Franco's European crossover webinar, make sure you tune in an hour early using the same link to catch up with Paul. And I have an announcement to make. We obviously have gone with the European crossover name, which was not, so we did not select anybody's title. That's a title that Paulie had used previously in years past, and we thought it was a great title for the webinar. So with that being said, we did still select a winner from the people that had given us suggestions. So I'll talk about that when we're finished with this ADP. But the number, FX Macro just tweeted, and I retweeted it, that the numbers are probably going to be good because it's not a locked up number. And Asia, little risk off that we saw in Asian trade has perked back up in North American trade. Bonds are down, yields are up, so it should be a decent number. We're looking for 200,000. 219 was prior. I'm actually short a little bit of dollar yen. I don't mind being short a little bit of dollar yen right now because we're out of this hourly channel, and you can see this hourly channel. Although that we might get a spike back up to 111.40 following the number, I'm actually inclined to add up there if we do. And the one thing I have to admit about the dollar yen is it's actually weaker. It's actually, generally speaking, weaker, even as risk is stronger, bond yields are higher, and the dollar yen is still weaker. So that divergence I'm playing into. But you'll see that this is a Bloomberg economic calendar, guys. So if you guys, I know I always get questions on, oh, where'd you get that calendar? It's a Bloomberg terminal. So unless you're willing to pony up $2,800 a month, you're probably better off using like Forex Factory or something like that. Oh crap! I didn't mean to do that. No, I have to move this over. Excuse me. I'm playing with Windows here, trying to figure where the heck did there we go. All right. So data will be out in literally 30 seconds. Here's the calendar, and we're looking. Watch ADP. That's the number right here. You'll see it here first, guys. So stand by. I got a 5-minute chart of the dollar yen. We'll probably spike up to 111.40. That would be my assumption. Man, this pound's stronger at the moment. Ooh, weak number. Whoa. 163. Yeah, I didn't expect that number to be so weak. See if there's any revisions out here. Nothing. You know, I think that probably caught the market off guard a little bit. 217,000, so actually revised a little lower from previous. So overall, guys, that's a weak number. I don't mind being short the dollar yen right now.
Yeah, nice shot.
Yeah, I mean, you know, it's coming down
Good
a little bit.
Good observation that it wasn't doing what it should have done with the correlated markets.
No, it really shouldn't have. I mean, and we might now take stops below 111.25. It's not a huge mover at the moment, obviously, with the dollar yen. It's not flying all over the place. But what we should see is, you know, maybe a press up in the euro right back up towards this this is 116.55, 56. This is the 618 retracement, so we might actually be able to clear that now and make our way up towards 117. Pound's actually pretty strong this morning. We're getting towards those levels, that spike high that we had from yesterday. Now that news, let's talk about this really quick. We had some news yesterday about Germany's going to make some concessions and, you know, get, you know, just kind of allow for the UK to push some of its Brexit plans through, and the pound spiked up. Then it spiked back down because then you got people that denied the oh, here goes the dollar yen. Come on. I added a little bit to it, so I want to see it like plow through some of the support. Anyway, the pound spiked up, then it came back down, you know, as those reports were denied. Now the thing is, I think that the initial report that came out is there's got to be some truth to that. And the thing about these negotiations and leaks and people, you know, false stories out there, you know, there's, you know, has to be some pushback against some stuff that was leaked, probably because they don't want the market to, you know, get overly excited about something that's not done yet. But I think there's going to be some truth to that. So I think the pound is starting to, you know, pick up the idea that the news that we're going to see, you know, the potential news that we're going to see is overall going to be, you know, good. At least they're making their way towards, you know, a concession and perhaps, you know, ultimately a Brexit deal, which obviously, you know, will put the pound a lot higher than we're currently at. I wouldn't be surprised that we see the cable back up in the 140s if, you know, if a deal was announced today. You know, we could be up from 130 to 140 within, you know, just a couple of sessions, I would think. But the pound is actually acting pretty good down here. And whenever you have a bottoming, you know, you're making a bottoming type of formation. It's a process. It's not, you know, it's not something that happens, you know, it's not something that's easy to do. I think that as you're developing a bottom, trying to develop a longer term bottom in the markets, it's going to take some time. And by the way, gold and silver just popped. Silver is actually right back up towards its highs of the session right now. Keep an eye on gold and silver. They both look pretty good here. Let's gold is breaking out. I don't know if you guys had a chance to read that the blog that we put out yesterday. It was a bullish piece on you know, the divergence between gold and silver. Gold is actually, it's got a bull flag pattern, points to 1240 now, and silver, you know, silver, if we can break above this 1430 level, that's previous support, was the previous 618, 161% extension. I think we can get above 1430. You're going to see a nice spike. Now that's this is spot price. In futures, it'd probably be around 1432-ish. But if you saw a move above just basically previous support, current resistance, you know, I can actually set it as an alarm here. Whoops. Let's grab this. Looks like that, and add an alert. And you know, if that alert goes off, then you know that it's you know, we got a probably a more bullish outsized move coming out of silver. It's because you're going to get a lot of squeezing with the market extremely short. And like I said, the euro's firm, the pound's firm, the dollar yen's, you know, pretty weak. But the dollar yen, I think probably needs to see a move back down towards the 111 level to really freak anybody out, because 110.50 is going to be really the bigger support here. And what I'm doing is I'm playing just inside of this range. So while we're in, towards the upper end of the range, I'm expecting to move back down towards back below 111. We get down towards 110.50, depending on how I feel from a macro point of view, will determine whether I'm, going to be, bullish or bearish the dollar yen at that point in time. So, if we make our way back down towards 110, 70s, it just depends where we're at. One of the things that you pointed out, Dale, yesterday is, and I know he stepped away from the mic for a few minutes, but the S&P stopped right at really key support. Now, here's the 4-hour chart, but you can see previous spike high back in January of this year was at 2880. We came down, retested that yesterday, and it has held thus far. But I'm going to tell you guys that, and you saw my tweet. Well, for those of you that follow me on Twitter, you probably saw my tweet yesterday. When we tested that support at 2880, I didn't expect it to break, not the first time around. We're going to need a couple of whacks at that, and overnight we came back to the 2880 as well. So, if we break yesterday's lows, which is right here, if we break this 2876, that is going to be a pretty bearish event for the equity markets, in my opinion. Like I said, I didn't expect it to break the first time around, but the second time around, we may not be so lucky. Now, Dale, you back?
Yes, buddy.
You are, okay. So we had and Steve, if you're here, or Stelios, you're here, you feel free to chime in. We had. Hey, good morning. Hey, Steve. Good morning. We had opened up a contest to try to give Paul Franco's new webinar a name, and we got a lot of great recommendations. I'll read you some of them. Give me a few seconds here. So I got a few really, really good ones. Like Chad, he wrote in. He said pregame with Pauly. I like that, especially being it's near football season, or we're going into football season. So actually tonight's season opener tonight, huh, Dale?
Yeah.
Pretty exciting. Kevin wrote in 7 a.m. 7 analytic moves. The morning routine, I thought was pretty good. Patty wrote in so many, and she had like the AM money report, morning FX review, Pauly's pre-market exchange, which I thought was pretty good. Pete wrote in and said the FX Dawn Patrol. Bob wrote in, he said the morning face-off, which I thought was pretty clever. Dollar yen's breaking down a little bit here. Sorry, gotta turn my focus a little bit towards the dollar yen. The morning face-off, which I thought was pretty good. But we have selected a winner, and even though we're not using the name, we had to get a winner because we were having a contest, and even though we decided to use Paul Franco's name, the name that we are going to go with as a team is the Morning Grind, and that comes from Benedict. And Benedict, if you could please give me or email me your address, I'd appreciate it. And I'm going to send you a bunch of ForexAnalytix goodies. The Morning Grind would have been my pick too, just because I'm such a coffee freak fanatic, and I know it was Stelios's favorite as well. And I want to just say congratulations, Benedict. And if we ever need a backup name, I like the Morning Grind. Matter of fact, I think I'm going to rename the face webinar the Morning Grind. How about that, Dale? Just kidding.
Sure.
Just kidding.
Sure.
No, but do you drink
grind.
coffee? Do you drink coffee? You do. God, I plow through coffee. It's ridiculous. But I just want to say congratulations to Benedict. We're gonna send him a bunch of tchotchkes t-shirt stuff and all that fun stuff, and want to say thanks to everybody for submitting their ideas. Really great recommendations from everybody. So
Tchotchkes. I haven't heard
tchotchkes,
that since I was a kid.
Is
That's what my mom called our toys.
Hey, you know what? I'm going to, sorry, I think I'm going to close up my dollar yen short here.
Good trade, man.
Thanks. Yeah, just take a little bit off the table. I'm just kind of chopping around. Yeah, it was a good setup. I don't mind being short the dollar yen, and I won't mind shorting the dollar yen again, especially if equities continue to roll over. I think that's the right trade. So, but I'll just continue to play this back to the downside, until we're back below 111, and then I'll, revisit on what I want to do here. So, a couple other things that I need to mention before I pass it over to Steve and Stelios and back over to you, Dale. First of all, I just want to say thanks everybody for listening in and supporting our cause. I hope you're enjoying the free webinars, but if you are, to help support us, you have to support our sponsor. Our sponsor is Forest Park FX, and if you don't know where they're at, they're right here on our website, Forest Park FX, and you can get a hold of them right at the bottom of this page where it's our reimbursement program. You can get a hold of them right here. There's their email and their Skype account. So I'm going to go ahead and put that link in the chat box. Make sure you chat with them, especially if you're not happy with the broker that you're using right now. They can assist you, no matter if you are a U.S. trader or if you're anywhere outside the U.S. But if you're anywhere outside of the U.S., you can actually participate in our reimbursement program. So, and then this way you would get ForexAnalytix potentially for free based on how much trading you do. So anyway, want to thank everybody for listening in. Steve, Stelios, Dale, it's all yours.
Hello.
Okay, buddy.
Hey, good morning.
Good. Have a great day, man. You got off to a good start. Keep
you guys, all right, do the same. Have a good one, guys.
Thank you.
Hey, Steve, Stel, how are you guys?
Good.
Good. How's your computer today, Steve?
Oh, this is a big discussion, actually.
Yeah.
Apparently, my computer has no issue, but this is a big matter of discussion. It's some very weird things. We're still looking into it.
Nice gold trade. Nice accumulating the gold into this.
Yeah. I really believe that we will have more upside. Of course, nothing is done yet, but I feel good about holding building the gold position and holding it long. I think it has quite a good potential for a resumption. I also think more or less the same applies to the cable. I mean, yesterday's move was retraced partially. I actually considered, at the end of the day yesterday, making a pattern in play about that. But I didn't because I prefer to be a little bit more cautious. But I do think that yesterday's reaction, this nice outside white candle that we had, is not going to be like a one-off thing. So I do think that, cable has a nice potential of resuming higher. That I showed yesterday, the pound Kiwi, and specifically I mentioned that a break above this symmetrical triangles trend line resistance is going to be a big event. What I forgot to mention yesterday though was that there is also a nice setup forming here in the pound CAD, and if I zoom out you can see it here. So descending channel for a potential of this was for a potential of this being an ABC, and how you see that the channel has acted perfectly so far. So we found support there. We actually then retested that previous low, so you can even call this a double bottom. We've already fulfilled that, and now we're on our way higher. I would be a little bit careful with 170, 150. It's a nice horizontal area of support that can now act as a resistance. It's actually a horizontal area of support resistance because it has acted in the past as a resistance as well.
Steve, we just got some numbers actually. mostly in line.
Most times it's support, but it has like the
Sorry, you there?
resistance and
I think it's lagging a little bit. Anyway, let's go through the numbers. We had some numbers just coming out of the US and Canada. Jobless claims, a little bit better than expected. Okay, Steve is switching to his other router. Non-farm productivity in line, unit labor costs marginally lower.
Still,
okay, and Canada building permits, oh, that was not a good number. Negative 0.1% versus expected 0.9%, and negative revision as well. So I'm guessing USD CAD is moving a little bit higher. Let's have a look.
I'm a rooter for you too, Stel. I root for Steve and you and the whole team.
Yeah.
So everyone should have a rooter in their corner, not just a router, a rooter.
That's what we call it in the UK, man.
All right.
I'm British educated, so I
you are. You like the James Bond of FX.
Yeah, only I'm ugly and I can't drive very well.
Oh yeah.
So while Steve is going through all that, what can I say? Oh yeah, I mean, I don't know. I actually missed the first half because I was on a meeting with one of our guys. I don't know what Blake talked about. If he talked about sterling a little bit and what was happening in the last couple of days, but we've had the usual seesaw of information. You know, there was a source that said that Germany was about to make some pretty good concessions in the whole thing, and apparently the whole issue of the Irish border might be solved. And that brought cable to like 130 yesterday at some point, and sterling was really spiking higher. And then we had the semi-rejection by the Germans saying, you know, nothing's changed. So it's like a battle of fake news or proper news. I mean, I don't know what to call it, but it seems that the pound is actually gaining back some of its gains. So it's taking back some of its gains. So it's like 129.30 or 40, whatever it is in cable. And I've said this before, everything we've heard so far, even if it's rumor sometimes or is denied and partially denied, everything we're hearing is slowly building up to some kind of a positive
slowly pointing to the potential some resolution, right?
Yes. It's constructive.
By the way, Stelio, I don't know if you went through the numbers, but one thing is for sure, USD yen is having a very bad day. So far, we have a Marubozu black candlestick. That's definitely not good, especially given the fact that this rejection came from a horizontal support resistance area. I've said plenty of times lately that I find the USD yen to be extremely tedious. So, you know, I've abstained from trading it. But my only comment.
Oh, Jesus, it's his other router as well, is it? Let me just type him.
Yeah, still, as long as euro pound remains under pressure, that's a good sign for a cable.
Yeah.
Lower, but
see, there's like a 20-second lag or something like that, and we back. Okay, yeah, I agree, Dale. You know, as long as euro pound is under pressure, that's going to help cable, and vice versa. You know, okay, but you know, I still think that sterling at these levels, you know, barring a no-deal Brexit, which, okay, it's supposed to be still a 50-50 event. You know, I don't think so, but it's supposed to be. Then I think there's just upside for sterling. You know, you can, Steve says, hold the show. Yeah, don't worry. We got it. He's switching to another route.
Okay.
What was I going to say? Yeah, as long as this is, you know, as long as this is happening and we're still into negotiations and there's no negative news saying, you know, that's it, end of story, then I think, you know, I think it should be positive in the end. And you can actually see that the market is quite heavy and short in sterling, in the DSI and the COT as well, because every piece of good news rallies a little bit. Every piece of bad news sells off a lot, and this, you know, this tells you a lot of things. You know, the sentiment is still very bad, and you know, it was for good reason for a while, but as I've said before, I think in the past few months, couple of months, things started to look a little bit more positive. So that's my, oh, I've been made the presenter. Show my screen. Okay. So that's my view on sterling. Now, another thing we can talk about, something we don't talk about very often, is our good friend Bitcoin. I don't know if you guys talked about it this morning. Bitcoin has been, we all know the parabolic rise it saw in the end of 2018, and the top, I think the top was marked by when the
futures contract.
The futures contract, exactly. Was it the 16th of December? What was it? And then also the guy who founded Ripple, or who was one of the co-founders, he sold all his stake, his whole stake. And so, that usually is a sign that things are not going higher. And we retraced a huge amount of these gains. Still, Bitcoin, on a 2-3 year basis is massively up, but it's been struggling. And look at this move it's had since the beginning of 2018. Bitcoin is actually traded very technically, and it's surprising for an instrument like that. But we've had this support zone here, which has been tested times, and I think the bottom of it is around 5,800. But we've had a little bit. It tried to push away here in July, then it came back down, tested again, and this could be read as a bearish flag. I don't know. It's a channel of some sort, and it's really trying to break it now.
Looks like you need a capitulation move to the downside, don't you think?
Yeah,
I think Rega had something on the weekend video to look at the week ahead that showed, I don't know, 5,000, 4,000, something like that, ultimate potential targets.
Yeah, that would make sense, because that there's going to be loads of stops below here, 5,800. So there's going to be loads there. We could easily take it 5,000, maybe even lower. Yes, I think Greg is spot on. But then again, if it bounces from here, 1, 2, 3, 4, 5 times, the more it bounces, I think the more it will probably, resume higher. If you put a gun to my head, it's probably a good risk-reward trade to buy it here with the stop, or buy it close to here. If it gets closer to the, these lows here, buy it at, 5,900, whatever, with a really close stop. And this thing's a beast, though. It can move $100 within a minute. So, Steve is ready. So let me try and push it back to Steve.
I'm here, Steve.
Nice look, still. Nice look.
I just didn't want to interrupt you.
No problem. I passed you the screen. But yeah, Bitcoin has been very, very interesting lately. Anyway.
Speaking of which, and I know that it doesn't interest that much many people, but I have to say, and very briefly, because personally I don't care so much about cryptocurrencies, but I have to say that this breakdown in Bitcoin was more or less expected. You can see here this was clearly a corrective move, and I think that this time this 6,000 area, if it breaks again, I think we're not returning back to it, and if we do, it's going to be as a resistance. And I have to say that Ethereum, which theoretically speaking is like the other big star, is like breaking down from a key level. I mean, the first key level was 400. We broke below it. I said that if that happens, we're going to go down to 250. We won't get down to 250. We consolidated within a triangle. We now seem to be breaking below 250. I think all cryptos look like very, very bearish. Of course, at some point we're going to see some kind of a reaction. But one thing is for sure. Let's take Ethereum as an example. It was at 1,400, and it's currently at 225. Right. So I think, and Dale, you are the one that has been in the markets for many decades, but the rule having to do with categorizing something as a bubble is if it actually ends up losing 80% or more from its highs. So in that sense, I have to say that the vast majority of the cryptos have already proved to be bubbles. Right? We were saying that all along, but I mean, even using that old rule, that's the case, right?
Well, it's definitely dropped. They've all definitely dropped like maybe not 80%. I don't think Bitcoin has dropped 80%, but yeah, the altcoins.
But you know something, Stelio, and I'm going to finish this discussion so we can go to real assets actually. But you know something, the only reason that Bitcoin hasn't dropped more than 80% is that if you've seen, there is a shift in the capitalization. I mean, there is, God make it that, but in essence, among cryptocurrency enthusiasts, a shift to safety, and among the cryptocurrencies, Bitcoin is considered the blue chip. You know what I mean? So the only reason why Bitcoin has done somewhat better is that there are a lot of people that don't want to go out of cryptos, but they see that definitely this is like a huge bear market, if not a disintegration, and they're thinking that Bitcoin is going to hold better. And you know, in essence, that's a self-fulfilling prophecy. They've made it so.
You know, sometimes bubbles, Steve, you could end up with an echo bubble afterwards, similar to what happened here in the U.S. with housing prices. So we had the bubble, it popped, and I remember 2010, I went in and bought a property because, you know, they were still under pressure, but we had an echo bubble. And I never thought that housing prices would recover to 2008 levels, but there's an example of a bubble that popped, and then in certain areas of the country actually surpassed all-time high values from the housing crisis.
You're absolutely right.
Yeah,
you're absolutely right. But I think that there is a distinctive differentiation in this case, and that one, and this difference is the following. Actually, it is the fact that you know, the reasons that created the first housing bubble, you know, became a reality once again. Because what created the first housing bubble? The fact that the Fed tried with monetary tools and monetary policy to fix the problems and help the economy recover after the 2000 crash. Right. But in the case of cryptos, you know, I doubt that, you know, it's going to be so easy for us to see an echo bubble, at least having to do with fundamental basis, because the vast majority of the excuses and reasons that have been given to inflate the first bubble, I don't see them coming back again. You know what I mean? Because there were, in essence, some speculations about what would do what and why, that they have already been shot down, you know, from reality. So, you know, I would be a little bit more skeptical if an echo bubble can emerge as easily as you know, reinflating the housing bubble, because at the end of the day, there is absolutely no question about it. Even if you buy a house during a bubble, you are left with something in the end, right? I mean, it's bricks and walls. You can live there. You can rent it. Perhaps, you know, if you buy at the wrong, you know, at the very wrong timing of the market, instead of making back your money like in 20, 30 years, you might make them back in 60 years. So your kids might make it back. But still, you have something that's left over. It has great intrinsic value, right? Even if you're left, let's say, if they oblige you to hold it forever, you still have something.
the housing bears would say this: houses never die. So there's a pretty good supply. People do, houses don't.
Yeah.
What do you think of that?
Yes.
Huh?
Exactly.
Yeah.
That's
okay.
That's
anyway, that's the end of my.
So let's go back to our favorite. Let's go back to our favorite FX and stock. By the way, having to do with stocks, the only thing that I have to say, two first comments, and then I'm going to switch to, you know, metals and FX, is SPX so far doesn't show signs of distress. So here it is. SPX doesn't show signs of distress so far. It's a mild pullback, but Nasdaq did display, you know, some aggressive bearish behavior yesterday. Actually, if you remember, we drew that a long time ago. But as I've said, for me to get enthusiastic about NASDAQ, it needs to fail this confluence of supports. One of them is these previous highs here. They formulate, in essence, a horizontal resistance area. It might act as support. And as you see, that coincides with this ascending trend line support, which is quite important because this ascending trend line has been tested multiple times and has proved that it is of importance to the market and to the market participants. So, those come at around, let's say, 7,470. I do think that if we actually breach that area and we do it, especially with some momentum, I think that NASDAQ is going to be in serious trouble, because then, technically speaking, this becomes a very clean ascending wedge breaking down. And, theory says that that might even lead to a retest of the beginning of the wedge, which in essence is like 1,300 handles lower than we currently trade. So that would be, a mega, trade. Now, at the same time, look at VIX. VIX is testing resistance once again. And, this looks like a descending wedge, right? So this looks like it has the potential of breaking up to the upside. Now, I mentioned yesterday the DAX. I said that 12,100 was critical, because if we made it, below that, then, there's only the 11,800 area left, which, if you look at it on the long-term charts, that's a horizontal support area. But most importantly, it's the neckline of a very big head and shoulders formation. You can see it here on the weekly very clearly. So, there are some warning signs that have started flashing, but we're not there yet, because it's good to wait for confirmation, because if that actually is the case, you should expect a very decent sell-off. So, instead of jumping the gun, it's rather better to confirm, and there's still going to be enough left to make some decent money being short, even if that proves to be a corrective pullback. Okay, now I'm not going to focus on metals. The reason being because it's free for everybody. If you go to ForexAnalytix, you're going to see here there is a link for our blog. So here it is, blog. So you're going to see here that the top blog post is the one that we actually uploaded yesterday. Our precious metals due for a relief rally. I think it's worth reading this. This is a post that Stelios, Blake, Grega, and I made yesterday. So, instead of me going over it, I think it's way more informative. You'll find a lot of information there. So, I do think that metals, have the potential of rebounding from here, bottom line, but you can see the specifics there. Now, there are a couple of more things I wanted to show. One of them is USD SEC. I think that USD SEC is in a corrective formation. So, I think, this has the potential of moving higher. This is CAD yen. It's also something that they haven't shown for a few days. And, I was looking over before, like, what haven't I shown the people here, like, for some time. So, CAD yen remains within this symmetrical triangle. So I think, a little bit more patience is required here. I already showed you, when my connection got lost, I showed you pound CAD, and I think, it's more than clear what's happening here. But one of my favorite potential trades here is USD MXN. The reason being, and I'm very, very close to actually doing something with it, is this is exactly what I drew like several weeks ago, that I was expecting a rebound like in an ABC form. This is exactly what happened. I mean, even to the level, just not at the speed. We reached the quality target, like AB equals, A equals C, sorry. And, we're pulling back. We had like a massive shooting star forming. And today we're pushing lower. The combination of these three candlesticks at the end of the day, if it looks like this, it's going to be an evening star formation, and that's a very bearish signal. So especially if we close below 1920, I think that this is a nice trade setup to look for more weakness. So USD-MXN, I think, very well positioned. Now, if you listen to me yesterday about the USD TRY, we were near the highs yesterday in the webinar of the day. We're currently like about 2% lower. I specifically said that, you know, perhaps for a short-term trade lower, it looks like a decent opportunity because, you know, there is a big chance that it's not ready to push to new highs yet. So I do think that, you know, there's good potential, you know, for more consolidation. On the other hand, USD ruble on the precipice of a major bullish breakout. If that's the case, you should expect a push, a move towards, you know, I have a couple of important resistances, one of them at 70.70, the other one at 71, so, you know, quite close to each other. I think that we should probably see these levels. Now, I said yesterday that, you know, it remains to be seen if that major rejection for crude will bring some follow-through. So far, we're seeing some follow-through. You know, if I was long, I would be very, very worried with that candle that we got. But I think that, you know, we're still in some kind of a correction, and, you know, it's not easy to read what kind of form it's going to take. So, you know, I would remain a little bit more patient. I want to see more price action to determine if this leg higher was like the first leg higher of the resumption of the uptrend, or it was simply a counter trend move to a bigger correction that is unfolding to the downside. Okay, as I've said multiple times for those of you that listen to the webinar, predicting in advance the form of a corrective move is extremely hard. It's probably the hardest thing for somebody to do in a market. So, you know, jumping the gun doesn't really help here either. Good thing, you know, that for me it was important that this 70 resistance area was important to determine what's happening. And as always, I only care about daily closing levels. And on a daily closing level, we actually never made it above this zone. So, you know, never even considered getting trapped. If I was a shorter term trader, I might have, you know, gotten chopped up by what happened here. So, Stelio, will you help me a little bit with questions? I'm sure that people have asked for something that I haven't covered yet.
Yes, we have a friend who's asking about oil.
That's done, obviously.
Oh yes, of course. Sorry, man. I'm sorry. You want to try Swissy Norway? You want to try that? Our friend Gregory is asking for that.
NOK Swiss, sure. Let's see what we have here. Never even had a look at it. Oh my God. Just look at this consolidation, right? Definitely have to tell you that it's about to break down.
By the way, you're looking at it the other way. So anyway, it doesn't matter. We can just invert it.
It's the same thing, Stelio. If he wants Swiss NOK, he needs to invert my, you know, exactly what I'm going to. Listen, we came to this very prolonged consolidation from the upside, right? There's no question about that. So, you know, there is a very decent chance that when this finally breaks, it's going to be to the downside. Until that happens, we've been stuck in this choppy range since 2015, January 2015. I see no reason why you would want to trade this, in all honesty. I mean, okay, you might want to trade the range, for sure. And in the very short term, this looks like an impulsive move, although it's already decently mature, right? So this can be like a 1, 2, because this is an ABC clearly. This looks like an extended third, like 1, 2, 3, 4, 5, perhaps. So we seem to be near that, perhaps a fourth wave and the fifth. So, you know, short term, it looks like it wants to go lower. Longer term, I think that, you know, you need to see some kind of breakout from this range, to feel confident that something is happening. But regardless, if you look at the big picture, it looks like that NOK wants to break lower against the Swiss. So, it is what it is. What else,
Okay. We have some euro crosses that are being asked.
Absolutely.
Euro Aussie, Euro Kiwi, and Euro CAD.
Absolutely. Let's have a look at them. Okay, so Euro Aussie, Euro Kiwi, Euro CAD, and let's throw Euro Yen in the mix. So Euro Aussie retesting again this high. You can see it here. Obviously remains bullish. I mean, it's clearly a move that came with momentum. I won when we were exactly here that day. Here in the 18th, I was on vacation. I warned that I believe that if we do break out from this trend line, this looked like a corrective formation. And if we break out, we should see a resumption higher towards the highs. I didn't expect that it would have that much of a momentum, but it did. Now we seem to have more or less stalled at the previous highs, but I don't see like some kind of a big reversal yet. So, would I be buying up here? Absolutely not. It makes no sense, right? We've already made a big move higher. We're testing the previous high. Momentum seems to be waning. But, is it enough to turn bearish? No. Of course, you want to be short here, put your stop loss above today's highs, and, hope that actually, we're going to see some pullback. From a reward to risk perspective, it makes sense, right? It does. But, that's not the way I like to trade. I'm just, saying. Now, having to do with the Euro Kiwi, let's have a look at it. Tagged yesterday the 161.8% extension of the last, move lower, gave us this nice shooting star. No real follow through today. As I was saying yesterday, we had this discussion with Dale. Euro Kiwi, has broken to new highs, but is lacking the required momentum to make me feel like, there is more coming. So, is it bullish? Absolutely. Would I be buying it? Nah, I wouldn't. EuroCAD, nice V-shaped recovery. And to be perfectly honest, considering the move, from these lows here at 138 to the 161.50 highs, and the nature of the move lower and the nature of the recovery, there is a decent danger that EuroCAD has, a lot more upside. Regardless, we're currently testing the 200 EMA. This is a horizontal support resistance area as well. I think we need to see a close above this levels that we are currently testing. Even, a little bit of a pullback. If I wanted to do something, I would be looking to actually buy it. Okay. By the way, another great signal that this was coming to a low, and if you remember, I was expecting one more move lower. We have drawn it here like a long time ago, and I was expecting that might end up being the last move lower. Is this big RSI divergence that we had here also, which was quite indicative that perhaps a turn is coming. Now, Euro Yen. Euro Yen never actually made it to 131.50. For me, that's a very critical level. It pulled back, but I have to say the following: we did find support at this horizontal support resistance area, and the move higher was quite impulsive in the short term. So, if I had to assume what can happen from here, it would be that we might see something like this. Right. So if I had to assume, I would be looking for something like this in the price action. Stelio, other questions, mate?
A lot of messy charts.
Steve, one more, I think, because we have 3 people asking for it. Just before we go, it's not a standard one. They're asking about the Indian rupee. So USD, INR, if you can.
USD, INR, absolutely.
and then we can go to the interview.
Okay.
And their stock market has loved this, which is interesting.
Of course it has. Of course it has. I remember specifically Dale mentioning here that the USD INR has more side. The main reason being, isn't this a textbook corrective move? I mean, this is a textbook pennant. If you want to put a picture next to the definition of a pennant, this is it.
Yeah.
So, you know, the move, also the parabolic nature of the move, you know, leaves no doubt that the move is impulsive. Obviously,
Sorry.
Kaliroy and Dimitra. Yeah.
Pardon my kids.
No problem. So the USD INR is definitely another impulse. Now, we've already moved quite a lot. Buying up here makes not much sense, because not for any other reason, the chances are that it's going to move higher, you know, still, even in the short term. But where would you place your stop loss? So, you know, buying has a high chance of making you some money, but definitely can't fulfill any decent risk reward criteria. So what would you be doing in this case? You know, hoping for a pullback towards, let's say, this consolidation zone at 70.30 or something like that to buy. But one thing is certain, it's not done moving higher, right? I mean, even a pullback should be considered a buying opportunity than anything else. So Dale, is your guest here?
Yes, sir.
Okay, enjoy the
All right.
interview, and you know, we'll be here tomorrow as always.
Thank you, Stel. Great analysis, starting from 2 hours ago with Paulie, Blake, Dale, Stelios, Steve. Wow. Hi, Greg. How are you, buddy? Thank you for returning the face. Always ready to welcome a Canadian. I don't care what the politics are between our two countries. So I just patched you the screen. Looking forward to seeing your visuals and your voice. How are you, Greg?
Good. How are you guys?
Good. Thanks so much for coming back. It's been a while. And there have been some
I was on about a year ago, and we were looking for a U.S. dollar bear market. That was July or something of 2017, and we ended up obviously with a big pullback in the dollar, and then now we've got the upside thrust. So the opposite is showing up.
Yin yang, buddy. So you were working for a broker at the time, so you've set up kind of your own shop, and you're on stockcharts.com. What's your business model now?
Oh, so I work for Stock Charts as a technical analyst, and we have we have 9 technicians on staff. So quite a few people that write commentary into the markets, mostly about equities, but I cover off commodities in the Canadian market.
Okay. Because there are a lot of independent. There are a lot of independent contributors to that, aren't there? There used to be a lot.
Yeah, and I'll show you the blog page. Just if anybody's interested, it's free reading. So if anybody's looking for something, but I write on stockcharts.com, and these are the 4 articles that I write: Canadian Technician, Commodities Countdown, one called "Don't Ignore This Chart," which is usually just a one chart, and then Chart Watchers is a newsletter that goes out with a few people every day. And if anybody wants to reach me after today's presentation, it's greg.s@stockcharts.com, or Dale and I communicate through Twitter at Schnell Investor.
Okay, great. So you talked about natural gas on Twitter. So you're going to go through the fundamentals first before the technical
I'm not
setup?
a big fundamentals guy, but there's a little bit of a fundamental setup here, so we're going to cover that off. And much like Tom DeMark, it's getting your setup and then doing your countdown into the trade. So I think the biggest thing right now is we're watching for, does the seasonal trade follow through, and if we get that, we'd like to be on board. So this is from equityclock.com, another Canadian guy that writes this, Don and John Vilu. Anyway, you can see that in September, normally we get a nice bullish push in natural gas, and this is based on a 20-year period. So it's pretty nice. Let me just enlarge my cursor there that makes it a little lazier. So anyway, we're sitting right here in terms of the seasonality time frame. So it makes it a nice place to look on the charts.
Does it have anything to do with, or do people use LNG for heating?
Yeah, so
Is that
heating
part of
and
it?
cooling.
Okay.
Heating and cooling are the two big things, and obviously in the summer, the U.S. is cooking, so they're trying to cool everything off, and in Canada we're cooling slightly, but for the most part we wait until winter to really hit our stride, and I'll show you a little bit of that here. So one of the reasons that the setup is particularly interesting this year is that this is the underground storage levels compared with the 5-year min and max. So the gray area is the 5-year maximum amount that we've had in storage at that point in time, and then the low is the lowest amount we've had in storage. What you see here, the gray line was last year, and the blue line is this year. So all of this year we've been below average. Sorry, the gray line is the 5-year average, not last year, the 5-year average, and we've been below average pretty much all year. But the real thing here is we're actually starting to get outside of the 5-year average. So there's a reason for us to be a little more interested than we normally would. It might just be a seasonal swing. But one of the reasons that the trade sets up nicely this year is that we're about 700 BCF below average, and it doesn't mean that we can't make that up. There's weather and hurricanes that are part of the factor. How early does winter come makes a difference. And what we see is in the spring, so this is August to November, you can see that come November, we really start to suck down on the amount of gas in inventory. So as an example, if we weren't able over the next 3 months to get this back up into the top of the range here, we'd probably find a nice surge in natural gas prices. And the longer this stays outside the range, the more interested we get.
Okay.
So that's the setup. So that's the, because the charts, quite frankly.
Any reasons for the drawdowns? Is it demand or is it problems with new supply?
No, it's demand. And what we have, so demand in general, just to pick a number, in the winter months, we'll actually pull about 200 billion cubic feet per week out of storage. And in the summer, we have these big underground caverns that you pump into, and everybody kind of holds it underground, and then we pull it out. So by having this underground storage caverns, natural formed caverns, what you do is you end up creating basically a price cushion. It allows the price to trade in a range and not be so spiky.
Okay.
So this is I live in Alberta in Canada, and what you see here is this is kind of the winter seasonality where it really pops up, and these are the futures contracts going out to August of 2022. But basically there's a seasonal bump coming up, and in September we're just starting the acceleration in that almost every year. So that's how heating affects it.
This. A triple market in commodities happens with a backwardation market rather than a carrying charge market.
Right.
Does that happen in NG too?
Yeah, so we currently have backwardation, and what we see is right here. You can talk about the market is said to be in contango if futures are lower than, if future prices are higher than spot prices, or it's in backwardation if they're trading below the spot. So the chart also shows that winter prices are typically higher than summer prices just due to colder temperatures. Now that's not just for Alberta. I'll show you this is the price of the actual natural gas over the last 5 years, and this is a monthly chart demonstrating the closing price. And what you see here is this $3 level is pretty important. We've been trading kind of under that $3 level for a while now, and this round line here, just to pick a level, is a 10-month moving average. The purple areas show you where September has been, and only in 2 of the last 5 years have we had any sort of surge following the September. So again, we're outside that bound in natural gas storage, so that makes it interesting. And the second thing that's coming on a little bit that will help add to demand is the LNG terminals are starting to send more fuel offshore. And with that, we've got a setup that could start to actually accelerate the natural gas much better than last year. Last year was a pretty sleepy trade where absolutely nothing happened. So we'll find out if we start to get that surge, but we haven't, you know, what we're looking for is the setup. And now with that lack of volume in storage, it makes it much more interesting.
Okay. So you have, now we're moving to your bailiwick, the technicals.
Yeah, so now we're getting into the actual natural gas pricing contract here. And what I want to show is literally look how flat this has been. It's just been an absolute boring trade for most people, unless you're doing channel trading. It has been hard work for anybody to make any money related to natural gas, especially on the producer side if you want to trade related equities, and I'll show some of those charts in a second. I would say the charts are still pulling back, and they haven't started to form a base for taking off yet. So continuing to watch that. One of the things that
did.
Yeah, so
last year Chesapeake did, right?
Yeah, so I'm just going to pull up Chesapeake here. Let me go grab a ticker symbol. Here's CHK, and this is just the 18-month graph. And what you see is, you know, we had this big sell-off into February, and now jumping out of that, the 5-year view for Chesapeake, you can just see, you know, it's been similar. Every commodity bounced right on the lows in 2016, and we all had a pretty good year that year, but 17 was a little harsher. Now we're hoping for something a little more productive, and we're not sure we're going to get it, but that's what we're setting up for. So on this natural gas trade, when you look at the daily chart, this is just, you know, again, over here is 20 cents, so $2.80 to $3. We're pretty sleepy. There's not much going on. I would say that the reason that the charts are interesting now, one is the seasonality, but the second is the setup on momentum. And what we want to see here is we've had a recent, I'll call it wave, and we're coming back, and we're just kind of resetting our momentum back here around zero. What we'd like to see is this start to shoot to the upside. And on the weekly chart, we have the same thing, where both of these are just sitting on the zero line. And obviously, when you go above zero in momentum, and for momentum, I'm using what's called a price oscillator, a percentage price oscillator, where we don't keep track of the actual price, we keep track of the percentage change in price. And I find it quite helpful, especially on the weekly charts, that when you start to move above zero, it's a good place. So we're literally sitting at the zero line, both on the daily and on the weekly. And if there was a place for the chart to kind of pick up momentum, this would be a nice entry, typically, if we were going to start to see a seasonal surge. So looking at that, you can, it wouldn't take much to define a downtrend here, and I'll just draw that in. So looking at this,
are the futures still pretty thinly traded, or have they become more liquid?
Yeah, there's, I mean, they're traded, but the big thing for nat gas traders is really that volume. The supply side, and if supply was to start to tighten too much, that's going to take the, I'll call it the low price option out of natural gas, and then it's the weather surges or hurricanes. I guess that could be considered weather, but you have typical seasonal winter weather, and then you also have the shock of hurricanes. It's those two things, and this week we took production offline because the hurricane that was moving through the Gulf, they actually closed some of the offshore platforms and shut them down. So it's kind of, we have this big sloping trend line here on a weekly chart, and obviously any break above that $3 level now would be kind of enticing for us. That would be a nice place to sign on.
Okay. Nice presentation on NG.
Yeah, so I think what I'd like to show, or what I think is the most important part about it, is that the everything is very sleepy, and it's you know, sometimes it's the calm before the storm that kind of wakes you up into the fourth quarter, and that would be the big bullish thrust. So we also have one other choice, and that is that this is an ETF run by First Trust. These are the components of the ETF, and they're basically natural gas related companies, and you can see here the percentages that they carry. what I did was I took this list just to be neutral, and one of the issues when you're looking at natural gas related companies is you always get some oil production with it. So the company will trade based on its ratio of oil and natural gas, and then follow your crude prices and natural gas prices. So these charts I've set up here are in order of price performance. In other words, the better performers are at the top of this list, and as we go down, you'll find the charts start to go from uptrends to flatter downtrends. Working across the group. So stock charts makes an indicator called a technical ranking, and we use kind of 6 different time periods, anything from 200-day moving average, 125-day rate of change, 50-day moving average, 20-day rate of change.
Kind of like a relative strength ranking, like IBD used to use.
Yeah, the one thing about the Investors Business Daily is they kind of take, just to pick a number, all of the stocks in the market, let's say 5,000 of them, and they group them all together. And so one of the things that I found about the relative strength thing on IBD, and it's a black box, so we don't get to see how it's exactly calculated. The stock charts ranking is public.
Okay.
But on the IBD system, what happened was they put them all together. So everything from small caps to large caps are all in the same group. And with that, what you'd find is, a stock would almost always be above 50 unless it really fell out of bed. So from a big picture perspective, it probably worked, let's say portfolio managers, but from an actual trading perspective, it was relatively insensitive, because for the most part, half of the stocks didn't participate because you have small caps that continue to drift lower, that kind of thing. With the stock charts one, what we've done is we've set it up based on market cap, and we have 3 different ones. We have a large cap, mid cap, small cap. And what's nice is about the size of the group, let's just pick a number. So for the large caps, we have under 1,000 stocks in there. When this line actually starts to change up and down, this is a pretty good sensitive indicator. And you can see here was W&T offshore, and if we just click on that chart, here's our scooter ranking at the top, and you can see that this thing was in the top 25% of all of the stocks in terms of price move, and that's a pretty nice place to be on board. So the scooter ranking is actually, that's what our acronym for it, the scooter, SCTR. Our scooter ranking is quite proficient at getting you into the trade. I would say it's less helpful getting you out, and there's some indicators that are really good at helping you enter, and some that are better for your exit. This would be one of those. So what I particularly like about it is when you get something, so what we do is we calculate where everything is compared to their moving averages on a stock, and then we physically rank those every day, and then save that final number. So it moves through the day, but it's also, then we get a final, much like a closing price. And so this scooter ranking comes on here, and you can see that, for this period, it's pretty nice, and this is still behaving well. Now, if we go back to the rest of the list, I put the scooter ranking on all of these, but you can see that, like, here's National Fuel Gas has been gently creeping higher on the stock charts technical ranking. The overall market has been creeping higher, but this is actually starting to improve slightly better. It's still not great. What we want to see is the stocks, be like WTI, where they're really outperforming, and it's that momentum that makes other scanning tools start to kick in. So for people who are scanning on relative strength compared to the S&P 500, or they're scanning on 3-month breakouts, or they're scanning on whatever they're looking for, the scooter's probably going to trigger the fact that the stock is not only outperforming the S&P, or it's broken out of a 3-month moving average, whereas let's say all of the stocks in the market are doing that, this will actually show the level of outperformance. So it actually has to move faster in order to get a strong ranking.
Okay, so you really came here with, wanting to talk about the natural gas setup, but you've really given us a look at things that you use for other instruments and other asset classes, correct?
You bet. Yeah, you can use it across the suite. Yeah.
Okay. anything besides the natural gas that has your attention on your radar, Greg, before we wrap it up?
You know, it was interesting that you that they just briefly covered off the gold and silver, and I would say the one trade that I particularly like, if people are followers of George Lane and stochastics, if I had to go pick one, it would be the gold trade. And again, I realize it's out of favor, but that's the idea behind stochastics, is buying things when they're out of favor and get them when they go back in. So this is the GDX, the ETF for the gold miners. You can
and those
see
are the blue chips, seniors.
Yeah, and the scooter ranking shows this thing is terrible. It's 1.6. There's hardly any ETFs in the market that are worse than this one. But what you get is these big dips on the weekly chart, and when you kind of sit down here for a while, these can be nice entries. And what we're waiting for now is watching for the turn on these. And some of them. This one here was a good almost 50% surge. This was 150% surge.
Yeah, that was a big year in 16. Yeah.
So we're sitting at this level, I'll call it broken support, which pretty much anybody who wanted to sell is probably sold about now. And so I'm kind of looking for a low to be set up there, and I'll call it a stochastics trade on a weekly chart where I'm looking for the signal to start to kick in to get back into this trade.
Thank you so much for being with us today, Greg. I always learn from you, and great demeanor and presentation. Thank you, my trading warrior brother. And why don't you show that first slide again, your contact slide, so that people could take a screenshot and take a look at how they can get a hold of you. There we go. And
so those are all my blogs, and if you want to get a hold of me, those are the two email addresses or two contact points that work pretty well. And thanks for the opportunity to speak again, Dale.
Good hunting, buddy. May pips rain down on you this fall trading season. Thanks for
have a good.
Thanks for being with us, Greg. And the video will be out in a few hours, so I appreciate you sharing some of your work, views, and methods. So that's a wrap for us, everyone. See everyone tomorrow for TGIF. We'll be here. Face will be open for the NFP. And we'll see you tomorrow. Remember, don't just count your pips, count your blessings. And have a great rest of the day of trading. Try to be flat, and we'll look for some things to do to react to the reaction tomorrow. Adios. Thanks again, Greg.
Thank you.